Hello all and welcome to Ignitis Group earnings call for the first 9 months of 2022. Today, Ignitis Group CEO Darius Maikštėnas and CFO Jonas Rimavičius will present you the results and business highlights of the group so far this year. Meanwhile, I, Head of Investor Relations, will moderate a Q&A session, which we will have shortly after the presentation. We encourage you to send any questions you might have. With that, Darius Maikštėnas, handing over to you.
Good afternoon, everyone, and thank you for joining us today at our results presentation. I will begin with the highlights of this year so far. 2022 continues to be marked with the strong green generation results and ongoing challenges of net working capital. In the first 9 months of 2022, our year-over-year adjusted EBITDA grew to 357.2 million euros. The increase was again driven by green generation segment performance due to the launch of Pomerania wind farm in Poland and better results of our operating assets. As a result, our green generation segment's year-over-year adjusted EBITDA increased more than 4 times, from 44.9 million euros to 185.8 million euros. And overall segment's result accounted for more than a half of the group total adjusted EBITDA. Therefore, following the strong performance of the green generation segment, we expect our 2022 adjusted EBITDA to be in the range of 420 to 460 million euros. Having a strong backbone of increasing renewable segment results, it allows us to continue committing to our dividend policy. Thus, we paid 62.4 euro cents per dividend per share for the first half of 2022. Additionally, we have also made a decision to reinvest all additional profit earned in 2022 from green generation into building new energy infrastructure in Lithuania. This means that additional profit from green generation will not be directed to increase the dividends for 2022, which we foresee to grow in line with our dividend policy, but will be reinvested to contribute to ensuring Lithuania energy security and green transition. Moving on to challenges, same as during our previous result call, due to the continuing extreme situation in the energy markets, our customers and solution segment remains to be mostly affected as the result of difference between tariffs set and power market prices, or called regulatory differences, as well as suspension of natural gas purchases from Gazprom and its replacement with LNG cargoes since April 2022, which led to an increase in our inventory and value. The group's net working capital significantly increased by 582.3 million euros and reached almost 1.1 billion euros since the end of 2021. It was primarily funded by concluding credit line agreements with banks with a total limit of around 719 million as of today. This resulted in a negative free cash flow of 626.5 million euros and net debt increased to 1.5 billion euros since the end of 2021. However, as a result of state budget measures provided to consumers in relation to increased energy prices, we expect these metrics to improve by the end of this year. Nevertheless, so far this year we made record high investments, which increased almost 3 times, reaching 367.8 million euros, primarily as a result of investments made in green generation projects. Our further investment growth will be supported by our green generation portfolio increase, which since the end of 2021 increased by around 1.9 gigawatt, and for the first time exceeds 4 gigawatt target for 2030. Let me now elaborate further on our renewables portfolio development, as it is the key driver of our increasing results. As already highlighted, we substantially increased our renewables portfolio, which almost doubled in size since the end of 2021 and now contains 4.5 gigawatts of renewable capacity. Total increase of 1.9 gigawatts was mainly driven by greenfield projects capacity additions. So far this year, our greenfield portfolio increased by around 1.6 gigawatts to a total of 1.8 gigawatts. Additionally, our further pipeline increase was the result of two acquisitions of a Latvian onshore wind farm and solar development project of 200 megawatts in the early stage of its development, and Silesia Wind Farm 2 up to 137 megawatts in Poland, which currently reached the construction phase. In terms of our pipeline split by technology, the largest share concludes onshore wind and solar development projects. And regarding the countries, the largest share of projects is in Lithuania, followed by Latvia and Poland. As mentioned, currently our green generation portfolio consists of 4.5 gigawatts of renewables capacity. For our substantial portfolio growth so far this year, for the first time, our total portfolio exceeds 4 gigawatts target for 2030. Moving to on a project by the project basis, implementation of project portfolio is progressing as planned, with a few exceptions. We foresee a minor delay in the construction of Mažeikiai wind farm, despite the first power to grid expected to be supplied as planned in Q4 this year. Due to some constraints in supply chains, the project COD date is postponed from Q1 2023 to Q2. Additionally, due to the grid availability issues in Poland, we expect that the portfolio capacity of Polish solar portfolio 2 is adjusted from up to 80 megawatts to around 40 megawatts. Accordingly, CapEx revised from around 50 million euros to around 30 million euros. Furthermore, as a result of disruptions in supply chain and construction markets, Vilnius HP biomass unit budget was revised from 232 million euros to around 270 million euros. It's important to note that based on our arbitration court ruling in the court case between Vilnius HP and Rafako, which was our former contractor before announcing their restructuring process, our claim was fully satisfied. And based on that, currently there are ongoing settlement negotiations, so we expect the significant amount of CapEx increase to be covered by compensation received from Rafako. There are no changes in implementation of other projects since our last earnings call in August. Now let me go through each of the business segment highlights over the first 9 months of this year. I will begin with an overview of green generation performance. Its strong results were mainly driven by the launch of Pomerania wind farm in Poland and better performance of operating assets. As a result, segment's year-on-year adjusted EBITDA increased more than 4 times from 44.9 million euros to 185.8 million euros. With regards to new installed capacities, it increased by 95 megawatts, which also contributed to a growth of green electricity generated levels by 17.3%. Finally, our investments substantially increased more than 10 times comparing to the 9 months of 2021 and reached 166.4 million euros. This growth was driven by the investment made in onshore wind farms both in Lithuania and Poland and Vilnius HP biomass unit. Turning to networks, the segment's year-on-year adjusted EBITDA increased by 2.4% to 82.6 million euros, mainly due to the introduction of additional tariff component in the new regulatory period, which started in 2022. Similarly to green generation segment, networks investments grew significantly by 71% to 178.5 million euros. The increase was driven by investments made in electricity grid as a result of increased contractors' fees and higher levels of new connections and upgrades. In line with the schedule, we kicked off our mass smart meter rollout in July this year. In the third quarter of 2022, in total, more than 70,000 of smart meters were installed, which number reached 100,000 at the end of October 2022. By the end of 2022, we expected to accelerate to 192,000. And our target to finalize mass rollout process by the end of 2025 remains unchanged. On the operational metrics, we continue to capture decrease in distributed volumes, mainly influenced by the fall in distributed natural gas volumes as a result of warmer winter. However, as a result of extreme weather conditions, natural disasters, as well as strong winds and storms, our quality indicator, SAIFI, was negatively affected. Despite that, our SAIDI indicator improved as the result of the increased number of installed automatic solutions and staff management based on weather forecast. Opposite to increasing result captured in our two core green generation and network business segments, our flexible generation result decreased. Similarly to the first half of 2022, it was a result of lower levels of commercial activities due to the less favorable market conditions, which in turn is reflected in our year-on-year adjusted EBITDA performance, which decreased by 37.9% to 17.7 million euros, and a significant drop of 81.4% in the net electricity volumes generated. Also, as already mentioned in our earnings call of the first half year results, let me remind once again that considering the current geopolitical uncertainty, natural gas reserve of 1.1 terawatt-hour has been acquired. It caused a temporary increase in working capital level. However, the regulatory mechanism is supposed to ensure the additional cost incurred as a result of this transaction through the isolated regime services tariff. Let me now move on to the customers and solutions business segment, which, as mentioned previously, is mostly affected because of undergoing energy crisis. Our electricity and natural gas supply B2C activities continues to be loss-making. However, the segment's adjusted EBITDA reached a positive level of 35.3 million euros. The result was driven by natural gas in B2B result because of successful utilization of Lithuanian LNG terminal, which allowed us to secure profitable one-off deals with foreign B2B customers, and favorable temporary effect from natural gas inventory. Also, continuing extreme situation in commodities market led to our further net working capital increase by a total of 476.1 million euros, reaching 917.1 million euros, mainly due to lower energy prices included in regulated customer tariffs compared to actual market prices, driving the increase in regulatory difference, and purchases of unscheduled LNG cargoes, as well as no longer acquired natural gas from Gazprom, causing an increase in inventory. Finally, a 3-year postponement of third stage of B2C electricity deregulation to the end of 2025 was another outcome of turbulent energy market. However, we continue to maintain the majority of so far deregulated market share. Now let me separately overview Lithuanian state budget measures applied to cope with energy crisis and its impact to our group. In May 2022, Lithuanian Parliament amended legislation related to providing customers with partial compensation of increased energy prices. From the 1st of July 2022, increasing energy prices as well as the regulatory differences of regulatory supply customers accumulated by the end of the first half of 2022 is being partially compensated directly from the state budget through a tariff. Out of planned 570 million euros allocated from the budget, 365 million euros is being used to compensate the regulatory differences accumulated by the 1st of July 2022. And 205 million euros is being allocated to compensate increase in electricity and natural gas prices in the second half of 2022 for all B2C customers. Regarding these measures, impact to our group compensation of accumulated regulatory differences has a direct positive impact on the group's net working capital, while subsidies to the customers result in lower regulatory differences. Additionally, Lithuanian government will continue the provision of partial compensation of energy prices. For that purpose, around 1.2 billion euros is foreseen for compensations during the period of fourth quarter of 2022 to the end of 2023. In addition to compensation measures applied to all B2C customers, it will include partial compensation of the power bills for B2B customers over the period of the fourth quarter of 2022 and the first quarter of 2023. The foreseen compensation split between household and business customers is around 714 million euros and 446 million euros accordingly. Subsidies to customers as well as expectation that regulatory will set tariffs at the level of wholesale market prices are expected to result in lower or no new regulatory differences, potentially having a positive impact to group net working capital. With this, I hand over to cover financial performance to Jonas Rimavičius.
Thank you, Darius. We delivered strong financial results in the first 9 months of 2022. Our adjusted EBITDA grew by 61.7% and reached 357.2 million euros. Green generation segment again was the largest contributor to the growth and increased more than 4 times, reaching 185.8 million euros. The main drivers behind this growth were better results of our operating assets throughout all technologies, mainly due to higher electricity market prices, and the launch of Pomerania wind farm in Poland. If you missed our previous earnings call, let me remind you that for Pomerania wind farm, we managed to reschedule the full entry into CFD support scheme and are selling a substantial portion of electricity generated on a merchant basis this year, which delivers substantially better than expected results. Moving on to the network segment, we recorded a minor year-on-year adjusted EBITDA increase, mainly due to newly introduced additional tariff component. This component has offset lower electricity WACC and lower share of allowed return earned in the first 9 months of 2022 due to a temporary volume effect. In customers and solutions segment, we also recorded modest growth of 4.1 million euros, primarily driven by utilizing Lithuania's LNG terminal and securing profitable one-off transactions with foreign B2B customers, as well as temporary inventory effect. In flexible generation segment, we saw a decrease of 10.8 million euros due to lower levels of commercial volumes generated, mainly because of high natural gas prices. Moving on to the return metrics, our adjusted return on capital employed, return on equity, and net profit all improved, driven by growth in adjusted EBITDA. Adjusted return on capital employed increased to 10.6%, well above our targeted levels of between 5.5 and 6.5%. Adjusted net profit reached 202.4 million euros, and adjusted return on equity increased to 13.5%. The first 9 months of 2022 were record high for us in terms of investments made. We have never invested into energy transition and energy security as much as we did this year. Our investments reached 367.8 million euros, and we're almost 3 times higher compared to the same period last year. The increase was mainly driven by the green generation segment as a result of investments in onshore wind farms in Lithuania and Poland, as well as Vilnius biomass CHP unit. Investments into networks also contributed to the overall growth due to higher investments in electricity network, driven by a higher volume of works performed, as well as increased contractor fees. Next, our net working capital and free cash flow figures. On the left side of the slide 18, you can see that our net working capital has more than doubled compared to the end of 2021, and has been our biggest concern this year from the financial perspective. The reasons for this increase are mainly twofold. First, substantially higher energy prices, and second, replacing gas with LNG. And these two factors led to 552 million increase in natural gas inventory, 216 million increase in trade receivables, and around 100 million increase in regulatory debt due to the difference of energy prices included in regulated tariffs and the actual market prices. As a result of this increase in net working capital, on the right side of the slide, you can see that our free cash flow was negative 626.6 million euros. Moving on to our leverage metrics. As a result of increase in net working capital, our net debt has increased as well by 555 million euros since the end of 2021 and reached 1.5 billion euros. Net working capital increase has been partly offset by higher FFO and receivable received from EPSO-G in relation to sold electricity transmission assets back in 2011. The group's FFO to net debt ratio decreased from 30.5% to 23.9%, but still remains above 23% threshold required by S&P for BBB+ credit rating. Net debt to EBITDA has increased from 2.9 to 3.2 times and remains substantially below 5 times level, where we would still feel comfortable. To remind you, in July, S&P annual review process has been completed and resulted in reiteration of BBB+ credit rating with a stable outlook. So to sum up, despite substantial increase in net working capital, our leverage metrics remain healthy and makes us well positioned for delivering our growth targets. Finally, as a result of our solid performance over the first 9 months of 2022, we updated full-year adjusted EBITDA guidance. We now expect our 2022 adjusted EBITDA to be in the range of 420 to 460 million euros, up from previous 360 to 420 million euros, which represents around a 13% increase for the midpoint of the range. This revision is driven by strong performance of our green generation segment during the course of the reporting period. With that, I hand over to Darius to conclude our results presentation.
Thank you, Jonas. Let me now highlight you the key points from our first 9 months of 2022 results call. Ignitis Group adjusted EBITDA reached 357.2 million euros and was driven by green generation, which result accounted for more than 50% of group's total adjusted EBITDA. Green generation segment results substantially increased as the result of launch of Pomerania wind farm in Poland and better results of our operating assets. Therefore, following the strong performance of green generation segment, we now expect our full year 2022 adjusted EBITDA to be within the range of 420 460 million euros. Also, our investments in renewables allow us to continue paying out dividends. In line with our dividend policy, we paid a dividend of 62.4 euro cents per share for the first half year of 2022. Additionally, we made the decision to reinvest all additional profit earned in 2022 from green generation into building new energy infrastructure in Lithuania. This means that additional profit from green generation will not be directed to increase the dividends for 2022, which we foresee to grow in line with our dividend policy, but will be reinvested to contribute to Lithuania energy security and green transition. Regarding the impact of energy crisis as a result of growth of regulatory differences as well as natural gas inventory and value, our net working capital increased by 486.4 million euros in the 9 months of 2022, which resulted in a significant negative free cash flow and increase in net debt. However, we expect these metrics to improve by the end of this year. Nevertheless, so far this year, we made a record high investments, which increased almost threefold, reaching 367.8 million euros, primarily as a result of investments made in green generation projects. It is also reflected in our substantial green generation portfolio growth so far this year, which increased by around 1.9 gigawatts, and for the first time exceeds 4 gigawatt target for 2030. So with that, thank you for listening, and we are ready for questions.
Thank you, Darius and Jonas. So this now concludes our management presentation. We are open for Q&A session. Operator, handing over to you.
Thank you. We will now begin the question and answer session. If you wish to ask a question via audio, please press star 1 and 1 on your telephone keypad and wait for your name to be announced. Alternatively, please use the question box available on your webcast page to submit your questions. Once again, if you wish to ask a question, please press star 1 and 1 on your telephone and wait for your name to be announced. Alternatively, please use the question box available on your webcast page to submit your questions.
As we are waiting questions from the line, so we will begin with the written ones received in advance. So our first question is, you previously announced an asset rotation program and its launch in Q4 2022. Do you still expect to sell the minority stake of your first asset in the program, likely Pomerania Wind Farm, by the end of this year? Is it a good time to do this in general, considering an increase in interest rates and electricity prices descending from the heights?
Okay, so regarding asset rotation, currently there are no changes in our plans. What has been communicated previously, we still intend to proceed with the program. Regarding the timing of the transaction, I would say we will not proceed with a transaction which would be negative for the company. So we would continue with the transaction only if it generates a positive result. And we would announce more information when we sign binding agreements in relation to that.
Our next question. Negative free cash flow is largely from the deficit in the regulated activities and should be covered by funds from the state budget. When do you expect to receive the first payment from the state? What amount should be covered by the end of this year?
Okay, so first of all, regarding the negative free cash flow, so the overall the negative free cash flow is driven by multiple factors, one of which is regulated activities. The others are also increase in inventory balance as well as an increase in overall receivables. The part related to regulatory differences and which will be covered from the state budget. So the currently approved amount is roughly 365 million euros, which is actually being covered on a monthly basis in the second half of this year. So the money is already coming in to some extent, and by the end of the year, full 365 will be covered. And also we expect the new regulatory differences which appeared in the second half of 2022 also to be covered by the end of the year.
The next question on the same topic. Do you expect negative free cash flow to continue in 2023 and beyond?
So overall, the way we see our free cash flow, effectively we see that our EBITDA should cover the investments made. So more or less, of course, there could be deviations from year to year. And the negative factor which we had this year is increase in net working capital. We don't expect net working capital to remain at elevated levels for long periods of time. Hence, we will see a positive impact of reduction in net working capital over the coming years.
Our next question is, net debt was 1.5 billion euros in Q3 2022. What level can one reasonably expect by the year's end?
So by the end of this year, we expect it to be somewhat lower, not substantially though. The main driver for it will be the regulatory differences covered by the state. So this is one factor. But the bigger decrease in net working capital and net debt is expected to take place over the next several years.
The next question. Net working capital is temporarily bloated at the moment, but what would be the comfortable level in the long term, as share of revenue, for example?
So in terms of comfortable level of net working capital, we are not able to provide a precise figure, but just to guide you a bit, we expect it to normalize closer to historical levels rather than the current levels.
One more question. Could you please quantify the temporary positive inventory effect in customers and solutions in Q3?
Again, not being very precise, but from the overall result, temporary inventory effect constitutes the majority of the result of customers and solutions EBITDA in the 9 months.
Our next question. Could you please provide a flavor on how PPAs are progressing, average price dynamics for new agreements and share of the expected output?
In terms of PPAs, so we have concluded PPAs with the majority of our generating assets, which are suitable for such frameworks. The pricing levels are between 110 and slightly above 200 euros per megawatt hour. And in terms of proportion, more than 2/3 of our generation, which can be included under such contracts, is secured for the next year under such PPA agreements.
The next question. Could you please provide your expected insights on regulatory changes EU-wide? Proposed 180 euro per megawatt ceiling, discussed windfall tax, etc., and probably the effect on Lithuania.
So In relation to the 180 cap effect on Lithuanian assets, it will be limited because all the assets are contracted for the upcoming years at the levels either below or only marginally above the 180 threshold.
We have just received one more question. What explains such large difference between reported and adjusted EBITDA in networks in Q3 2022? Will this discrepancy continue in the upcoming quarters? Is superb result in customers and solutions sustainable, or should we treat these LNG-related gains as rather one-offs? What was LNG EBITDA contribution in the last quarter?
So, starting from the first part, regarding the difference of reported and adjusted EBITDA in networks, the main driver behind it is the difference between market prices and the prices included in the regulatory tariff. For networks, it is relevant only for the technological losses part, meaning that the network overall suffers a certain percentage of the loss of power distributed, and that loss has to be bought in the market by the network's operator. So the difference between the price we paid in the market for that power and the actual and the one included in the regulatory tariff created this temporary regulatory difference, which will be compensated in the coming regulatory periods. Yeah. So in terms of the second part of the question, whether this discrepancy is expected to continue in the upcoming quarters, so there is a twofold aspect to this. So for Q4, we will see such a discrepancy to some extent, but for the next year, the regulator has already reflected the higher expected electricity price in the tariff. Hence, next year we don't expect such discrepancies to take place. In terms of the result of customers and solutions being sustainable, and whether these LNG-related gains should be treated as a one-off, so it is more of a one-off rather than sustained result, and we would say that customers and solutions result, sustainable result, is lower than what we are seeing this year. In terms of EBITDA contribution by LNG in Q3 2022, it was an important factor, but less significant than the temporary inventory effect.
Our next question. Can you elaborate on the expectation that net debt will improve? By how much, roughly, and by what means will it improve?
Okay, so in short term, by the end of the year, it will improve by by less substantial amount. So let's say 100 to 200 million, due to the fact that regulatory differences will be covered from the state budget by the end of the year. In the longer term, the improvement will come from more significant decrease in net working capital, which we currently see at above 1 billion. Historically, it was closer to 100 million. As I mentioned, the sustainable level we see closer to the historical levels rather than the levels of today.
Another question on net debt. If net debt is to be reduced over several years, does that mean 2027, 2028, and 2030 Eurobond maturities will be paid down rather than refinanced?
So the short answer is that no, it doesn't mean that, because when looking at net debt reduction, you need to have in mind two things. So net debt will be reduced because of reduction in net working capital, but on the other hand, it will increase because of the investments being made in our both green generation segment and networks. So those factors will offset each other, and we'll see the somewhat upward trend in the net debt in the upcoming years.
We have a few more questions. Where do you expect your net working capital level as of end 2022? Higher, lower, same? And another, how should we think about 2020 and 23 investments after 9 months recorded 368 million euros? Can we expect similar CapEx spend run rates going forward?
Yes. So in terms of net working capital level at the end of 2022, we do expect to see a decrease, and the decrease will be driven by regulatory differences being compensated from the state budget, and the decrease is around 100 to 200 million euros. In terms of the investments for 9 months and whether you can expect a run rate of that going forward, I would say this is a reasonable assumption, which is in line with our strategic plan, which we published, to spend roughly 2 billion euros per 4 years, which means around 500 million per annum.
Once again, if you wish to ask a question, please press star 1 and 1 on your telephone and wait for your name to be announced. Alternatively, please use the question box available on your webcast page to submit your questions.
We have received a few more questions. How much does the cost of installing offshore wind farms increase during the last 2 years? Does Ignitis still see the possibility to participate in offshore wind farms auctions without subsidized tariff?
Okay, so regarding the cost of increase over the last 2 years, I think we are seeing the same numbers as the whole of the industry. So there was some increase in the numbers. However, we also need to keep in mind that over the 2 years, technology has improved as well. So it's a bit on the price level. There is an increase, but the same there is a gain on the efficiency levels. In terms of possibility of participating in offshore wind auction without subsidized tariff, so indeed we are seeing non-subsidized auctions taking place across the globe. In terms of our own decisions, so we are yet to decide what share of CFD tariff we will need for that, and the decisions will be made closer to the auction date, which will take place in the end of next year.
Another question on offshore wind development. What is the current status of offshore wind park project? When auction will take place? How many competitors do you expect? Any other important details worth to mention?
Okay, so the status, at least on our side, so we together with our partner Ocean Winds are doing the preparatory works so that we are ready for the auction, which is now scheduled for the end of 2023. In terms of competition, we do see a healthy interest from both local and international players. So there is likely to be competition. In terms of other details, I think there's not much more to share. What apart from what has been disclosed publicly.
We have just received another question. Wind energy price competition during peak production, what is the reliance on grid development by TSOs?
First of all, while estimating future pricing levels and demand and supply in our region, you should take the note that Lithuania has a larger structural deficit of domestic production in European Union, and entire region of Baltic states lacks some capacities. Therefore, over the time, we will see quite big potential to develop renewables across the region, and in the longer term, it will match also further development of TSO's networks as well. On top of that, we as the group, we have Kruonis hydro pump storage plant, which is currently 900 megawatts of capacity, and right now we are implementing additional flexibility element, fifth unit of 110 megawatts of the capacity, which will bring us overall over 1 gigawatt of flexibility, which is CO2 neutral, which will significantly contribute to possibilities to implement additional renewable capacities across Baltic states.
We have no further questions. Let us conclude our earnings call. Thank you for spending your time with us today. Should you have any questions, please do let us know directly, and stay safe and have a pleasant day.